TGIF warriors, how's everyone doing?
Good morning, Big Dale.
Good morning, Ryan. You're using your old English, huh? Cuppeth overfloweth.
Yep.
All the earths in there, huh?
Yes.
Alexander, how are you? Hugo, Ryan. Oh, there you are, Ryan. Okay. uh, Jim Carroll, nice to meet you. All right, let's take a look around. Who had a good week? Give me a Y if you had a good week. You have a good week, Ryan?
A bit of a mare week. I haven't done a lot really.
Okay.
A bit sideways, isn't it?
How about attendees? Hugo, you did? Tell us about it. Who else? I know more than Hugo did. Sideways, Simon? Okay. That happens. A lot of people.
Sideways Simon, that should be his nickname.
That's a good Oh, still,
nailed.
I know that's pretty good. Okay. Anyone else have a good week?
Hope people did. It's always good to see people having a good week, even if you don't
Hugo
yourself.
Hugo, what'd you do? Tell it, mentor us. Huh?
You had a good week by not trading.
Great week, Paul?
Good
Paul,
stuff.
you have great weeks most of the times. Greta week. What's Greta? Oh, okay. Kiwi yen on fire. Okay. Yeah. Blake prepped a lot of people for those carry trades. In fact, I wanted to, I was watching Guppy and Euro yen, and here's something I noticed. It's on the weekly, on the Guppy. Is that, the Guppy made new high. And remember yesterday I pointed that out, a weekly divergence in Bitcoin still, and then it crashed. Okay, so
Yep.
So be careful with your Guppy up here. The euro, based upon RSI stuff I do, even though it's, trying to put in a reversal week, still think it has to take this high out. And you guys know why, right? Okay. So I had a great week, in a sideways market. So Simon had a sideways week, and I had a great week in a sideways market. I had, four trades in energy and WTI and 4 winners. And yesterday I thought I really had it and that we were going to break down, and I'm flat again. But look at it, the weekly because of this dumb thing down here. Okay, strong week, you know, look at how crude is diverging. This is right up here. So you know what? I'm going to try it again next week. I've kind of let my guard down on Friday. I'm fried. Okay. So, I'm not going to try it, but maybe we get one more shot up to try one more high next week, and I will try that again. So, stay with what got you to the dance. So if selling rallies and marginal new highs is working and I'm not getting run over, which, happens, where you're trying to top or bottom pick something and it just, doesn't go your way. But this week kind of gave me a feeling that, it is more of a two-sided market. It's not running away, really hasn't made a lot of progress in what are we talking about here? Well, a few weeks, a month. So I'll be trying that. The dollar looks like it wants to hold this 93.5, 85.70, Jays. Okay. So $2 above this week's high. That would blow out the divergence. It's not a great week in the dollar, I don't think. Yeah. Follow through. Yeah, follow through to the downside this week. But for some reason they could this time we didn't get to the breakout. So, and I feel like how you felt with Aussie. I feel that way with gold. I didn't buy it when it was doing all this stuff in here, or after this, it just moved sideways. Anyway, I think it was this day. This is, and it looked like it was going to be bad, but, all it did was move sideways. It's threatening right here. And then I have the next resistance would be up here at this weekly triangle. If we get through this, call it 1800.
It's moving a lot like the Aussie as well, isn't it, gold?
Yeah, they're really, and
Obviously, there's a relation. Yeah.
a lot of people say it's copper, Ryan. I mean, I've been thinking it's gold for a long time, but I've been corrected, and people say it's more copper because they export more of that to China than gold.
Yeah.
But I used to look at Aussie and gold together. Anyway, that's about it. Any good stories from you guys? Dow, I've seen counts over 37,000, Sassy. Okay. And actually, when Greg was on last Friday, he showed a Dow chart that was in a wave 4 triangle, and the next rally is it that we're in right now. So up around 37,000, 37.5. If we're not getting confirmations, that'll probably be it. As far as time is concerned, all right, let's say none of my ideas are mine. Okay, I'll admit it now. Okay, none of them. All of my ideas are I
only
just
the
have
good
to
ones.
admit it.
Only the good ones are your ideas. The bad ones are someone else's.
Yeah. Anyway, I have no original thoughts, and
A bit like
I just
it's a bit like
huh?
my mother. It's a bit like my mother. I discuss with my father our portfolio that we trade, and we talk about trades, and she goes, "Yeah, I want in on that, but only on the winning trades." Like, yeah, nice.
Oh, women, huh? Anyway,
Yeah,
even
exactly.
our moms. Oh, come on. Anyway,
She knows
so
nothing about trading, by the way. Nothing. Absolutely nothing.
she knows enough. You know what I wrote on Twitter yesterday? You guys will like this. The guy was showing, some guy was tweeting, I think it was Peter MCM, about, all the changes being made at the Fed on front running. So I put out a tweet and said, I asked my nephew what he wanted to be when he grew up. And he said, Uncle Dale, after watching your highs and lows in the market, I want to be a Fed governor or chairman. So anyway, yeah, it, yeah, what a way to learn how to trade, huh? Sit on that desk. And anyway, what are you guys thinking going into the end of the week? Any thoughts? That I start looking ahead on Friday towards next week. And
Yeah.
someone
The-
told me, don't try and make
ECB.
your week. Don't try and make your week on a Friday.
Yeah.
Fridays for beer pips. That's what I was always taught. Fridays.
What
beer
are
money.
they?
Beer
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 pips.
money.
Beer pips. So you trade small, basically.
Yeah, trade small, and that's your Friday drinking money.
Yeah.
Oh, okay. All right.
It makes
so
sense, and I don't see anything that's gonna. Oh, I see here on the schedule that Powell's speaking. Is that right?
Yeah, he's at
Hmm.
some the SARB and BIS
Okay.
centenary speech.
Oh, yeah.
Oh, so it might
conference, I
not
think.
be.
I'm not sure it's
Yeah.
going to be anything too. And they supposedly, because they keep breaking it, go into blackout tomorrow.
Yeah, of course, that
Who,
blackout
this
thing.
guy?
Yeah,
You
but
know,
no.
they say that being a president can really age you. They show people at the beginning of their term and after
Yeah.
8 years. Look at what being a Fed chairman can do to the guy.
Yeah.
Yeah, and he was spotted that he's announcing the first rate hike in 2085.
Yeah, that's
Nice.
that's still before the EU Rescue Fund comes into
uh,
effect.
All right, Blake, save all our attendees and grab the screen.
Well, okay, I will. I'm gonna do. Yeah, what the hell do you guys have on your screen right here?
That's
Oh
Jay
my
Paul.
God, I'm done.
He's,
You're
he's
finished.
announcing the first rate hike. Blake,
We're finished. Okay,
in
so
2085.
oh my God. All right, so you guys are you guys are all trading for beer pips. Last night I have some ideas on what I
You're a
think.
machine.
Well, no, last night I just happened to I usually take my son to practice, but my wife has a friend actually who works on Wall Street. She's been with, yeah, she's been with Morgan for like Morgan. And then previous to that, she was with Morgan Stanley. I'm sorry, not JP Morgan, Morgan Stanley. And she's been with, oh God, I'm trying to think of who else previously. So a lot of times when we go out to New York, New Jersey, we stay with them, and their kid, we're a godparent to one of their kids. And now the kids are almost in college. Anyway, she was out visiting, so she took my son because she had to visit right there. And so I was at home, and I was in the chat room, and we were talking about all this news that was coming out. And my thought process last night was, look, we're going to see all-time highs overnight. This Evergrande news making payment, whether it's a big deal or not a big deal, I think it's what put the bid in risk overnight. And then, I was listening to another analyst this morning when I got up. I was like, he's like, well, it's not really that big of a deal. I'm like, man, I don't know. You were, if you weren't watching in Asia, that's exactly what kickstarted the rally and risk last night. It was that Evergrande news that they made this payment that was long overdue anyway, within its grace period, but they still made this payment anyway. So I'm like, okay, that's going to allow the Aussie to reach for 75 cents, which if for the ForexAnalytix folks, and even, well, actually, you know what? If you read the chart of the day yesterday, it was my chart of the day. I said, hey, they're going to reach for 75 cents in Asia overnight. And I didn't know that. I didn't know Evergrande was going to be the catalyst. I just figured that was going to be a decent recovery area. And it did. It hit 75 cents. Last night in Asia, when I was awake, it was spiking up like that to the 38% retracement. But you can see it spiked up to the 618 to the 75.11 level. And now you can see we're pulling back. All right. So we just hit the 618 and we're rolling over again. Everything's happening as I imagine. As sitting in my chair last night, I said, okay, we're going to hit all-time highs in stocks. We should. And, that was last night. And here's today. We're trading above all-time highs intraday for the S&P futures. Great. Here's my other thought, and this is why I wanted to toss it back to Stelios and Ryan. And Coach, hey, an opinion, whatever, if you have one, let's see it or let's hear it. The one thing I thought was going to happen is yields were going to break out. And if you look at the 10-year, by the way, the 10-year was my chart of the day,
2 days
breakdown
ago.
from earlier, this week, right?
Yeah.
That's a bearish wedge, and we should break down. That means that yield should go higher on the 10-year. So here goes the 10-year. And yesterday we broke above this trend line. Now, this is an what do they call those in Europe, guys?
CFDs?
Yeah, EFT. Is it ETF? No.
CFD.
CFD. That's right. CFD. Thank you.
Oh, okay.
The things that we wish we had in the United States, which we don't have. We have to just go.
Yeah, they are nice instruments.
They really are.
Better than futures.
Oh God. Well, minus the spreads. There's a way for.
Yeah.
Anyway, regardless, the CFD is breaking higher on the 10-year yield that is tracked by, this is a trading view look. The fact of the matter is we're getting close to the highs that were put in March. And so what I was thinking is what's going to really, you're going to see a rally in stocks. And I wrote it out in the chat room last night. You see a rally in stocks, hit new highs, yields break out, Aussie hits new highs, yields break out, yields turn the stock market lower, which ironically right now the S&P is coming off that 45.55 level. And because yields are going to go up and the market's going to go, oh, that was great, but I really don't like higher yields. And then the dollar was going to get a boost as a result. And so everything's kind of coming to fruition as I saw it last night.
Narrative. I like your narrative.
Yeah, but Ryan, Stelios, Dale, feel free to shoot holes in it. I mean, because that's the thing about being on trade floors for the last 20 years. On and off, and you guys probably know this. But when you trade, to trade, to make money, and maybe not order flow so much, but Stelia. So I don't know. Being
Well,
on a trade floor, this is what we talk about every morning. It's
Yeah.
like you hash out, like, these are the ideas that I see, these are the ideas that I'm feeling, and you put it all together to come up with a master plan. So how do you guys feel about what I just said?
if this breakout holds, Blake, we're going to above 2%, because that would be what it would measure. It's starting, I thought there might be a failing rally in here, and not make a new high and then pull back.
Yeah.
But it keeps, even though the end came off pretty good the last couple of days, the yields keep pushing. So, but I would be careful if it closed back inside the channel. I would abort that idea.
Yeah. Okay. Well, I think that you can see that divergence right there. I'm seeing if
Yeah.
our RSI is going to actually break out, which I think it is here, to confirm this move higher to 2%. But anyway, I do think yields are moving higher. What do you think, Ryan? Any ideas?
Yeah, I think I've got a slightly different picture of
Okay.
the yields to you. I'm looking at that. You've got it as April, May highs around the 170. I'm looking at
78.
more of a horizontal breakout point there. We're not quite at it yet. We need to get above sort of 171, breakout through there, and we're heading towards that 2% mark. So I'm not really seeing a breakout yet, but I don't think there's many holes to be shot in your theory. What I do when I come in the morning is you go through a checklist of what's happening in markets. You look at Aussie dollar, you look at yields and see what all the corresponding crosses and the like do. And yen hasn't really reacted to this yield move. Neither dollar yen, and we saw that last week where dollar yen was following yields up, and then we had a day or two where it just broke down. The correlation broke down, and just wasn't working. I'm seeing a bit of similar today. Dollar yen is looking more weaker just on an intraday price action basis, and that's even while yields are nudging these highs again. I don't know what it is. I don't know if we're hitting this pause period before the Fed. The market, as much as we know the taper is coming, the market still needs that confirmation. It still needs the FOMC to come out and say, yep, we're tapering in November, yep, we're tapering December, and it's going to be this amount or that amount. It's going to last this long,
Yeah.
So
Okay.
I think we're in this pause period, but as you say, get set up. Aussie dollars, had its little dip. It's creeping back up again, not quite getting to the highs. Dollar yen, I think we're in a pretty tight spot at the moment. We're still undecided. My marker is still the 1370.80 level. If we get below there, then we're potentially, really cementing those highs in the 114s. And as we know from a wider perspective, it's a big, huge level.
I actually agree with Ryan and with you, Blake, in a way. I think we seem to be breaking out in yields, but the problem is that we are so close. And by the way, I think the real test is the highs, like Ryan said. What is it, 176? But we are so close to that big week, first week of November, with the FOMC and payrolls and everything, that it could so easily become a false breakout. That's what I'm worried about. That's what I'm worried about. So,
well, we get Mark Chandler was talking about. A lot of people know it already, but GDP is supposed to be 0.5.
0.5, yeah.
By the way, the Kiwi is on its lows of the session. I'm still looking for a dip in this New Zealand yen. This is probably the biggest position I've been in for a couple of weeks. I sold this on Wednesday on this green bar as we were approaching this 261% extension, as we were finishing this inverted head and shoulder pattern. Most people that know me they know I don't like to trade this. I won't trade an inverted head and shoulder pattern as a continuation, but I will fade it once it reaches its target, because I think that these are poorly constructed. So if it ever reaches for a target, I will trade it on the short side if I feel it's within my my parameters, my risk parameters, and it fits my theme of what I'm trying to do at that point. So the Kiwi yen, I think, is going to slip back to 80, and but this is one of those that also has has the potential, because if risk, like let's say yields break out, let's go back to this whole narrative of yields breaking out. If yields break out and stocks go, oh shoot, what, I don't like it when, you have maybe even the lower end or long end of the curve, or maybe both, just ripping higher. Stocks might really not like that. And if they don't, this one could actually be a full-on reversal, like weekly breakout reversal type of move. But anyway, that's not even close to happening yet. So how do you guys feel about the dollar here?
Just to quickly go,
Yeah.
if I may, go on the point of the GDP. We're starting to see the effects in the PMIs. I mean, we've been speaking about this particularly in the FFL room, on the chat room, and on the webinar. If we're going to see activity dropping because of these supply chain things, it's going to impact GDP. And in the German PMI, I think it was a German PMIs. No, sorry, it's in the French PMIs. They noted they're seeing a noticeable impact on production levels and order books as firms simply lack the stocks to produce their goods, and customers are having to cancel or postpone their orders. This is what we've been looking for in with these supply chain issues, that it's going to start impacting activity, and we're going to see growth suffer. And I reckon that's going to happen Q3, Q4. So the seeds are sown.
Yeah, they are. And by the way, I was talking to my hair lady yesterday, as I finally got a haircut.
Hairy lady.
Well, she's a stylist. She charges way too much for a men's haircut, but whatever. I was talking to her yesterday, just about she's like having a hard time getting some of her supplies and whatever. And it reminded me that I needed to remind you guys, like I don't care about the adults in my life, but the kids I do care about. So make sure you guys and gals run out and get holiday gifts for your kids, like right now. Don't forget waiting for some Cyber Monday deal or Black Friday, if that's what you like to wait for. Those end of, a lot of retailers that my wife knows, they are completely skipping that this year because of supply issues. So they're not even offering discounts. So what you're going to find, a risk, I think, is that you're going to start shopping. If you're a last minute shopper, and you're not going to be able to find what you want to find. So I bought all the kids gifts that I needed to buy already, because I don't want to run into that issue. Because like I said, adults I could care less about. I'll make somebody a paper airplane and give it to them in a box. But as far as kids go, no, they got to get their toys and stuff. So I thought I'd throw that out there. I don't know why that. Because we're talking.
We're not getting any gifts. We're not getting any gifts.
We're not getting anything. Come on, Blake.
Not anything. No, that's it.
That's no excuse.
Right, paper airplane in a box. Lovely. Thanks.
No, but seriously though, like Ryan said, production is dropping because there's just simply not enough materials, right? And we've been talking about this for days and weeks here, that there's going to be lasting effects, or at least, well, not long lasting, but there's going to be effects that are going to be felt. And so it makes sense to see PMIs drop. Now, interestingly, PMIs in the UK actually surprised to the upside in quite a big way as well. But retail sales was weaker, so it's kind of mixed numbers out of the UK. And we do get Canadian retail sales in about 5 minutes.
Okay. Speaking of, if you guys aren't in the chat room, I'm going to give you guys kind of a idea of something that I'm playing here. I bought some dollar rand this morning, just a little while ago, at right here, 114.60, whatever I bought it at, 40.60.50, 14. And K-Man, your man K-Man, Ryan, was giving me a hard time. He's giving me a hard time in the trades room because I put in a typo. I typed 40.6050, and I had to remind him it's 4 o'clock in the morning here, so typos are not uncommon for me. So just K-Man, if you're listening in,
they're called fat fingers in our
fat finger typos. Right, but the reason why is this is we've seen actually in this currency, we've seen inverted head and shoulder patterns build, we've seen them play out, and we see him currently, and I honestly don't even care if it slips back to like 1440, because I'm playing it more as a triangle consolidation. So, and an eventual breakout. This falls in the same category as the dollar Mexican peso. The pair is holding up very well with stocks at all-time highs. So what do you think happens when stocks roll over? Whether that's today, tomorrow, or, a month from now, these pairs continue to hold up, these emerging market currencies. I was actually do you guys know who North Hero Trading is? You guys see him on Twitter? His name's Greg. Him and I were chatting last night. Him and I were just, having anyway, he's like, I am so surprised that, the peso and the rand and, what did he write to me? Let's see, I'll tell you. He said before he went off to go watch his TV show, he wrote me and said, I cannot believe, here we go. We had a pretty big conversation here. The peso and the ruble can't catch a bid. And I'm like, yeah, and the czar too. And he's like, yeah. And it, obviously the ruble today did, because we had central bank activity. They raised rates by half a basis point, I believe. Is that what they did?
3/4.
Okay, well, there you go. Well, obviously the ruble caught a bid as a result, but still, you take a look at like the dollar mex, it's holding up above the 200-day moving average still. The rand, and I'm just taking longer term looks. These should be at trend lows with stocks at all-time highs. They're not. So if stocks ever roll over, these are going to be, I think they're going to weaken quite substantially. So anyway, just some food for thought. So we got Canadian inflation data coming up, right?
No retail sales.
Oh, retail sales. Okay.
Yeah.
So Canada, we came out of this like wedge that we've been in for like the last, what is it, a couple of weeks. I mean, it's been this head and shoulder pattern. You can see it here. We actually made a brief low below 123, got a hell of a squeeze yesterday. And we've kind of eased back, obviously, with stocks at all-time highs. So I don't know if I'd even look at it like that. I'm just going to delete that for a second. But we do have the dollar Canadian that's actually holding up pretty well, considering crude oil's, still trading above 82, 83 bucks right now. So what do you guys make of this Canadian? Do you have any thoughts on the Canadian here? I know we're on the lows of the session right now, but
I was a bit surprised that the lack of reaction to the CPI, if I'm honest, because that was a fairly strong lift up in inflation, and we didn't get a 20 pip move on it. So I'm just wondering if that's been a bit underestimated. We got, I think the BOC is next week as well. So that's in play. I think it's right on month end, if I'm not mistaken. So yeah, a bit surprised it didn't react a bit more to that. But as you say, it's got the oil going the other way, and so yeah, I'm not sure what's going on here.
Paul just wrote that gold's almost at 1,800. Holy cow! So let's take a look at that really quick. I know we got about a minute and a half before. Nostelio sleeping at the wheel. We have joking Stel. I was actually thinking we were going to break these lows, and that did not happen. So yeah, we're almost at this resistance here, and this is a big one because I was looking at yesterday. I was looking at the 1792, then 1800.
Last time it got to 1800, it got rejected straight away.
It did, but maybe second time's a charm here. So
it will depend on the dollar, and I think me. I think we're going higher, but I still have I think there's an outside chance we might get another flush lower. But
there's an outside chance you might actually grow a full head of hair too by the end of.
That's impossible.
Ooh, that hurts.
He's gone there. He's gone there.
Okay, sorry.
Hey, I don't mind seeing this going higher. You know me, I had a good week, even though I didn't really trade, but my existing positions have been doing very well. So I don't mind seeing all these going higher, miners, everything.
Well, I still think it's a lot of it's going to be driven by the dollar.
Yes.
I really do. So, hey, we have the dollar. When's that? Or here, let's pull up the.
Now.
Shoot, sorry. Is data flash?
Oh,
Pretty
in
much
line.
Oh.
Core retail sales 2.8 as expected.
Okay, so no real reaction here. I mean, that's a 1 minute chart. We are trading lows, but you know, it's one of those things. I don't know if I really want to chase that around, right?
Don't try and make your week on Friday.
No. What'd you call it this morning? Beer pips?
Beer pips, yeah.
That's funny. That's when I was single. I used to call beer goggles. Is that what it was?
Oh,
that's
yeah.
a different thing
Is that
altogether.
the same
Blake.
thing? Is that kind of the same?
No, that's at last call.
So I get hella beer goggles. I'm like, you're hot. You're
you
hot.
got in a lot of
You're
trouble,
hot.
then, Blake.
What?
Hell yeah.
Oh, man.
All right. Thank God it's Friday.
call.
You know, hey, I want to say to everybody here, thank you so much for supporting us and being on our daily webinar every day. For those of you that are ForexAnalytix subscribers, thanks for your support. We really do appreciate it. And we're going to be doing a. I hope you guys have been enjoying the Trader Summit interviews. By the way, I wanted to say over the weekend we're going to have a week ahead video. If you guys can do us a favor. Make sure you subscribe to the YouTube channel. That'd be great. It's free to do that. You know, it's obviously free to give us thumbs up on our YouTube videos. That'd be great. It helps the channel out. Helps ForexAnalytix as a whole. The rest of the team here. So I really appreciate that, and hope you guys have a great weekend.
Cheers, guys.
You too,
And
Blake.
thanks, Ryan.
You too,
and
Blake.
thanks, Delios.
Thanks,
and
Coach.
Obviously, Coach. Thank you so much.
You've
Hey,
just got a
team,
question
go
there,
ahead.
Blake, from Jeff.
What's that?
In the comments, she's got a question from Jeff.
Oh, hey,
pay
Jeff.
VHC?
How much did you pay for
Haircut.
Oh, a haircut. I live in Thailand. It is a topic of conversation the other day. Thanks. It was $45 US. That's not including tip.
Where
Oh,
do you
wow.
go? Where do you go, Blake?
Over by the Biltmore. It's
only your hairdresser knows for sure. What's the name of the shop?
Nikki Wild Hair Design.
Oh. I'm
Why?
coming out there. I want one of those. Okay. Jeff
Jeff said
Richard
I paid
he
$1 2 days ago.
$1.
Damn, I'm
was
getting ripped off, man.
A
I
hair
get a great head massage at the
But
same
he
time,
uses a hair whiz, man. Blade
what?
number 3. See? Cuts his own hair.
I wish I could
All
cut
right.
my own hair.
Same
Yeah,
with the
you know,
Flowbee.
when you have hair that's like straight and I look like those little trolls on the pencil trolls that
Yeah, I remember.
you know, with those straight pink hair or whatever. That's what my hair kind of looks like. And so when you cut my hair, it's like actually like shaping a weed out front. You know, those like bushes that you can shape into like, you know, like you see people that do on the lawn, they make their bushes look a certain way. Like they shape them, right?
Yeah.
That's how barbers have to cut my hair because it's straight. It's straight. It sticks straight out. So,
You know, guys, Ben's here, but I have some bad news for all of us. We've all turned into chicks. We're talking about our hair on Friday.
oh my
Well,
goodness.
only
All
Blake is. You know, me
Huh?
and Stell just getting more and more depressed the more he goes on about his hair.
right.
I haven't cut my hair to cut my hair since 2006. I cut it myself, so there you go.
I've bought shampoo since 2018. I've still got the same bottle.
That's
Okay.
gross. All right.
Okay.
Now that's all. All right,
No,
guys.
I mean,
Good luck. Hey.
it lasts that long.
Oh, I love you guys.
Oh man.
See you
Have
guys.
a great weekend, everyone.
Thanks, everybody.
You gotta laugh.
Cheers,
know?
guys.
You gotta laugh. All right. Thank you, guys. So the team laid it all out on the court for you guys, and we're going to top it off with a great interview. I know Ben Maldonado. Every time he comes here, he preps. And
Coach, you got to pull down your mic. I'm sorry.
what do I have to do?
Pull down your mic.
What do you mean pull down?
There we go. The sound was low.
Oh, okay. Oh, I know. Okay. All right. So Ben, welcome back.
Hey
And
Dale, nice to be here. How's my level?
your level's good, Ben. And you know, I want to acknowledge that. How long have we been talking to each other now?
It's almost 3 years.
Okay, so you were one of the pioneers of commodity inflation and bull markets. I remember your call at the bottom of beans. That was a dramatic run. Commodities. God, you talked about. Who would have thought when you were talking about decentralization, and you brought up the Fed, that we'd be having, Fed scandal. So I mean, your work is elite, and I'm looking forward to where your head's at. And welcome back, and thanks for your giving spirit to show us your stuff.
No, I'm glad to be here. It's fun being here on a Friday, man. You guys are loose on Friday. Sounded like
Yeah.
happy hour.
Yeah, we're just punchy.
Yeah, it's tough.
Yeah.
Fridays,
Yeah.
it's tough to get the
Yeah.
energy going on Friday.
Yeah. So anyway, what you felt like Friday yesterday. So here we are, Ben. Rates are finally, testing the March highs and everything. And your epic cycle, I've seen you tweeting about it. So take it away.
Yeah, let's start. We're going to take a quick run around with a little bit of fundamentals, some cycles, and we'll end with some technicals. But hopefully we tie it all together, and you kind of see where my head is and why I'm positioning in a specific way. We'll start off with the themes for the fourth quarter, and they'll bleed over into the first quarter. These are kind of 6-month themes. We'll quickly review the major cycles that we're dealing with. The epic cycle, as you mentioned, is the 400-year cycle, which is really fascinating to watch when you understand the cycle and then sort of see the events as they begin to unfold. It just makes you say wow. And then of course the 70s analog that we've been talking about for a couple years.
Yeah.
Things are going to get serious in the next 3 to 6 months, and I think that's something that people need to be aware of. I'm calling for an energy crisis too. In the 70s, we had, the energy crisis of 73 and then 79. We're setting up for another one. And then, of course,
will it be an embargo lift?
No. I think it is going to be led by the supply side, but for different reasons, which we'll jump into.
Okay.
No, not even Putin. It's
Wow.
really interesting. It's the world of unintended consequences.
Tell me now, man. No, go ahead.
And then lastly, we have to talk
Stop
about
teasing us, man.
Lastly, we're going to have to address inflation, talk about inflation, and if you're not positioned for inflation, I think you're going to be missing the boat a little bit here. So let's jump in.
Okay.
2021 themes. We started the year, we were looking for inflation, stagflation, continued effects of the epic cycle with erosion of trust in these institutions that we've depended on, supply chain disruptions and food security. All of them have come to pass to some degree, some obviously more than others. Unfortunately, fortunately, depending upon how you look at it, a lot of these things are going to continue into 2022 based on the cycles. For the fourth quarter and the first part of next year, I think the major things we want to watch and want to be aware of. One is what people are now calling the Great Resignation. And I wasn't aware of this until a little bit ago, and I don't know how many people are aware of it, but between spring and summer of this year, 20 million people quit their jobs. Did you know that, Dale?
Yeah, I knew there, I've been reading about it. Yeah, I've been reading about it lately. I didn't know it was that huge, but definitely it was hard to put the thing together. We had the massive unemployment, the shutdown, so massive unemployed, and then we come out with a labor shortage.
Yeah, it's really an odd occurrence, and the result of this resignation or this issue with the job.
How are they paying? How are these people living?
Yeah, that's a good question. I don't have an answer. Before you could say it was it was all the government handouts that sustained them. I don't know.
They found another way and quit their other jobs.
I don't know. Maybe it's
They're
crypto.
trading crypto.
But
they became traders. Yeah.
Right. The key point for us as traders is we look at, what does this mean? Well, worker churn and labor shortages are going to lead to inflation, and the kind of inflation that is sticky and not transitory, which is wage inflation. Companies are going to have to pay higher wages to get people to work for them. They're going to pass that on to the consumer, and that is sort of the underpinning of this inflation cycle, and it's setting up to be a similar setup as we had in the 70s, where it was, wage inflation that was driving a lot of what we were seeing, in addition to the commodity side. The other thing the slack labor market does, having this trouble getting people into jobs, is it creates a stagnant economy. It's hard for businesses to grow. It's hard to, produce the things they need to produce. So we've got those two things working. Supply chain issues, it's clear they're not transitory, and everybody's saying, oh, they'll be able to fix that. All they got to do is this or that or the other thing. Well, if you've seen, they haven't been able to fix it so far, and it's not something that
they can't fix it just by keeping the ports running 24/7.
No, there are no easy fixes, and one of the solutions is onshoring, but that takes time. Takes time to build factories. It takes time to set up the supply chains, reestablish them back on the continental US. So this problem is going to be around longer than I think the consensus thinks. This one is titled Dark Winter. The next bullet, I think we're at a stage now where conflict within and between societies is inevitable, and it's inevitable because there is no dialogue. There's no discussion anymore. There's no.
So
what's
that look like? Civil war?
I don't know how it's going to take its how it's going to appear.
I mean, we're already there, ideologically. So
absolutely, but
go ahead. You look. You're putting it out. You got to say it.
Yeah, I think there's going to be violence. To what degree of type of war, I don't know. Internationally, between societies, I think there's a high probability we'll see a war, in next year. Within
you mean a global one? I've heard people say that nations are going to be so busy handling internal things, they're not going to have time to fight, other nations.
It's possible. I mean, as I said, there's conflict within and between societies. How that's going to play out, I have no idea. I just know that the background frequency is supporting of it, so we have to be aware of it, and then think about how is that going to affect our investments and how we're positioned. And then the last one is the energy crisis, and as a subset of the energy crisis and supporting this commodity super cycle, which I believe we're in, is greenflation, right? Because of everybody wanting to be green and moving to be green, a lot of commodities and the demand for them that are used in renewable energy is going to be off the charts. You got silver, you got copper, you got aluminum, you got lithium, all the rare earth metals. I mean, all these sorts of different commodities go into making these renewable type energy products. So the energy crisis, which we're going to go into specifically, part of that is supportive of commodities because of this greenflation phenomena. Real quickly on the epic cycle, for anyone that hasn't seen our presentation before, it's a large 400-year cycle. It was responsible in how we developed large centralized institutions that we organize our society under. We're currently at the end of that cycle. And when you have a 400-year cycle, 4 or 5 years from the end of it, you're right there. We're seeing a fragmentation phase where people are losing trust and losing faith and understanding that they cannot depend on these organizations anymore. And that's part of a transition from a tribal or communal society to one based on smaller groups and individuals, where we're going to depend on smaller groups like our neighborhoods or our neighbors or our families and each other individually to make things happen. My theory is that this is the real Great Reset, not the Klaus Schwab version that you're hearing about, that society and the world is going through this sort of transition as we enter the end of this cycle. This slide I update as more come along, but this is examples of what I call the failing large, powerful, centralized institutions. Fiat currencies, I think the jury's still out. Are they gonna be around? Are they gonna be replaced by cryptos? Banks right now are looking like, if central bank cryptos come in, they don't need banks anymore. And fintech and sort of digital currencies may be something that gets rid of banks. The other ones that we've added on recently, I think public utilities, we're seeing rolling blackouts, not just in Texas like last winter when they had that winter storm, but we're seeing them in Europe, we're seeing them in China. They're having trouble, the utilities are having trouble supplying power to people. And I don't know that it's coming to the United States, but I don't think we're going to be immune from it. So
no, there've been brownouts in California.
Yeah, and I think
Especially
it's
during the fires. They
Yeah.
shut them down intentionally during fires, but
yeah. So
there's also it's happening.
I mean, as you're going through your life and you're seeing things and you're watching the news, keep the epic cycle in your mind and look at and try and identify or try and at least be aware of these other institutions that are starting to fail, and what you might be able to do in your own life to counter that.
I have some advice, Ben.
What's that?
Stay away from razor blades.
That's a good one.
Go ahead, buddy.
Don't run with scissors, right?
Yeah.
In the 70s, big part of my thesis and my cycle work connects today and the period that we're going through with the experiences that we have on Earth in the 1970s. I kind of broken it down into two different slides here. The first, you have unpopular Republican president Richard Nixon in the 70s, Donald Trump in the current day, and then you can see how all the different things that happened in the period with these guys are the same. And remember, the impeaching thing is really amazing. There's only been 4 presidents impeached in the history of our country, and these two are connected in the 70s and present day. Now let's look at where we are now. Now we've got.
And you were presenting this stuff, Ben, before the impeachment. I remember.
Yeah, way before, because we added impeachment as another sort of indication that it was connecting, right? There was no impeachment on the first.
And you know what? If you go back one slide, you could change this now. When it comes to oil, go back one slide,
right?
Because you had that oil went negative.
Yeah.
You know what? They've also quadrupled.
No question.
Okay, I mean, forget negative. Say maybe the low was 10.
Right.
Or all right, be generous. The low was 40. They've doubled.
Yeah.
Okay, but they have quadrupled again.
No question, and that's, we're going to get into that with the energy crisis stuff. We'll talk about that. But this is the one after the unpopular impeached Republican presidents. We have a Democratic president who, again, this is not about politics. It's about what's going on in the world, is showing the same level of incompetence as Jimmy Carter.
We're getting Jimmy Biden.
Jimmy Biden, that was my nickname for him. We're getting the same sort of stuff too. I mean, look at the things that are happening. The one I want to talk about, the couple that I want to talk about that are interesting, are new ones, is the Afghan withdrawal in 2001. Everyone said, "Oh, the fall of Kabul is like the fall of Saigon." I had when I saw all that was going on, I had a different impression. Although I was only a little kid when it happened, I immediately thought of the botched Iranian hostage rescue.
With the helicopters went
the
down.
Helicopters crashed in the desert, and they just left the wreckage, and they had pictures on the news of smoldering helicopters. It was the same. I had the same kind of feeling as I did when I saw the chaos at the airport in Kabul. I was like, wow, this is like exposing
Deja vu.
American incompetence. So I connect those two there, and not fall of Saigon with fall of Kabul. I think for me, the experience was more applicable there. The other two that were really interesting were,
I heard a good tweet, and I'm going to let you go, but I heard a good tweet that we're being punished for electing Donald Trump with Joe Biden.
yeah, that's a good one. You know, I guess you
What do you
get what
think?
you deserve, right?
Yeah.
You get the leaders you deserve.
Yeah.
So here, the birth, I read this statistic. It said the birth rate was down 8% in 2020. You know, against all the conventional wisdom that thought, oh, with the lockdowns, we're going to have a baby boom, right?
Yeah.
It was down 8% in 2020. It was down the most since 1973. And in
A lot of low
1970,
testosterone guys out there.
I guess, but in 1972 and 73, we had record low birth rates. And now in 2020, the birth rate goes down by 8%. So there's another, in my opinion, there's another connection. And then the last
Who's going
one,
to pay taxes?
that's right. The last one that I think was already on the board is there was an Australian trucker strike in 1973 and 1979, both over higher fuel prices. This year, there was an Australian trucker strike, but it was for different reasons, over the COVID restrictions and vaccine mandates. But again, there's that connection of the same type of event happening in these two different time frames. A couple
just
others.
shows you that Australian truckers are crabby guys.
Yes, I guess a little moody there.
Well, they need a pillow to sit on. How about that? They have hemorrhoids.
They need donuts.
I'm sorry, Ben. I can't help myself today. Go ahead, bro.
So a couple that I think we ought to be on the lookout for. I think the first one is low probability, but certainly possible. Jimmy Carter boycotted the Moscow Olympics because they invaded Afghanistan. There's a possibility that we could boycott the Beijing Olympics. And let's see if it happens. Again, I think it's really low possibility. If it does, it's going to end up being another hit to this connection. Now, the last one is the one we're going to spend a little time on. The energy crisis in the 70s was OPEC and supply related. I believe the energy crisis that's coming is going to also be supply related, but it's going to be caused by this ESG movement, which is environmental, social, and governance sort of regulations that are being, put on major corporations, especially in the fossil fuel area. What is this crisis going to look like? Like, how is this crisis going to come about? Well, or why is it going to come about? Right now, we're looking at peak supply happening before peak demand. Like peak supply for energy, they think is going to be 2024, and demand's not going to peak out till 6 years later. Well, again, when you have supply falling and demand continuing to rise, that's a recipe for prices rising. These ESG mandates and pressure, sort of societal pressure on oil and gas companies are causing shortfalls in investments in new supply. And we'll go over the numbers. And the next one tells you the numbers. It's shocking. In 2014, $740 billion was invested in oil and gas field development. In 2020, it was down to $350 billion. Now, people could say, oh, remember, 2020 was a lockdown. A lot of things went down. You can't use that. That's not a good number. Well, the estimate for 2022 is $365 billion. So investments in oil and gas fields have dropped by half.
Thank you, Saudi Arabia.
Consumption and demand is still rising. Right now, what I think is happening is the oil price is searching for that level where demand destruction kicks in. How high is it? Well, let's talk about that and a few other things. First, I wanted to show you some of the CapEx and the problem that's happening right now. This chart shows the relationship between oil prices and capital expenditures. As you can imagine, when oil prices are high, they're willing to invest more because the returns are there. When oil prices are low, they invest less. Look what happened starting in 2020. Major divergence in these two things. The oil price has risen dramatically and investments are flat to down. Again, supply issues coming. Here's energy CapEx levels, projected and actual. Even by 2023, we won't be above where we were in 2019. Investment in supply is not going up. I saw this a couple days ago in the Wall Street Journal. I was shocked. I thought it was a Babylon Bee or an Onion headline or something. Exxon debates abandoning some of its biggest oil and gas projects. Members of the board, a remade board with ESG emphasis, are questioning their investments in oil and gas field development. That's not good for supply.
No.
What's the upside? Where could oil go? If we look back to 2011, 2014, when prices went that high and then, in the 145 to 140, 145 range, and then they came crashing down because the destruction got just demand got destroyed. It depends on the region you're in, but in North America, the estimate is they could rise 50% from current levels. That's $120 oil. So it's not out of the question. It's not like a moonshot type of thing where you think, oh, it's just going to be there momentarily. Here's crude oil monthly. I show this chart for a couple of reasons to show that, yes, we've had a tremendous move off the bottom. But if you look at this at the formation technically, we're above the highs from 2019 and 2020. And we've come back and we've checked them a few times in the last 6 months, but we're stepping out now. Now we're above the highs from early 2018 and holding above there. Do I think the 120 is realistic and not pie in the sky or crazy? Absolutely. I mean, I think we could see 114, 120, 130 crude oil in the not too distant future. All we need is some other supply issue, war, some sort of disruption, and this thing flies. Because supplies are already tight and and the relief is not on the cards either. The other area we're looking at, last time I was in, we only showed 2 charts last time other than the ES and the dollar. One was natural gas, the other was sugar. And we were talking about gas as it was, getting ready to break out right here, around this $3, $3.30 area, 320, 330.
Nice call.
I think this thing has a lot higher to go. I mean, $7, $9, $10 gas.
They're paying 16 in Europe or more.
Yeah, and the triangle, I know you're big on measured moves. The triangle break here, 1750.
Okay.
Which would be new all-time highs. So this, I think, is the issues with supply and the technicals and the cycles are all coming together to point towards the potential for another energy crisis and sharply higher prices in oil and gas.
Yeah.
The other thing we want to talk about before we get out of here is inflation. Inflation's here and it's not going away anytime soon, no matter what they've told you. And if you're paying attention, the narrative has changed, right? First it was, oh, it's transitory. Then after it persisted for a while, well, it's not transitory, but it's not going to be here that long. It's going to be, it's going to come back. Don't worry about it. Pretty soon they're going to talking about, well, it's high, but it's not going to go that much higher. So inflation's here and it's sticking around. This is something we talked about early, which was the issue with restrained labor and wage inflation. This hasn't even kicked in yet, right? The hard to fill job openings are up dramatically and wages are just starting to move. When it catches up, you're going to see inflation and you're going to see a lot of inflation. A couple of days ago, Paul Tudor Jones did an interview and he said the number one issue facing, on CNBC, number one issue facing investors is inflation. I'm always wary about those guys, and listen to them because, they talk their book and, they're either, you know, if they're telling you to buy something, they're selling it, or if you're telling you to sell something, they want to buy it. But this guy
I
is already.
talked to him on the phone once.
Did you?
I
This
tried
guy's
to get
already
him
made
to
his.
mentor me and
Yeah.
hire me.
He's already made his chops. You know,
Yeah.
he's in sort of the philanthropic mode. So I think
Yeah,
when he
came
says
from a cotton background.
yeah, I think
cotton
when he says
farmer.
something like this, you got to pay attention to it.
Yeah.
And others are saying, oh, the Fed's going to take care of it. The Fed's going to protect us. Don't worry about it because the Fed's got your back. He also said this: these guys are inflation creators, not inflation fighters.
Like that one.
And so remember that, position your portfolios to protect you from that. Let's quickly go through some charts. Here's what my best case scenario on the board right now is for the S&P. I think we just broke out. I had a cycle date this week. We've exceeded the price from the cycle hit earlier in the week, the high earlier in the week. So I think we're up and out from here. It's not going to be a straight line, but I do think we're heading higher into
Where's the line in?
Q1. The targets I have are, it could be 5,033, 5220, or 5558 if it really goes.
Huh.
I think those are all possible.
Any possible just maybe a new high by 100 handles and fail?
Could be. I doubt it, but I mean, I think that's lower probability. I think this is potentially a melt up, and here's essentially why. I think the dollar is topped out. Last time I was on, I was talking about, you know, sort of the dollar was right in here, which was, you know, about 99, somewhere around 90, 91. I said, yeah, I think we're going to get a move up in the dollar. Now I think we're going to get a big move down in the dollar. And with the big move down, that's why I think you're going to see the melt up in equities. But then after
wrecking ball.
The wrecking ball comes after Q1
Okay.
2022, right? When the dollar just takes off super strong. Why? I don't know.
So you could be long the world until then.
That's right. I think that's right. Commodities, here's the opportunity in commodities that I think I want everyone to sort of pound in their brains, is that this is a rare setup, man. It's a generational type opportunity. Haven't seen a Dow commodity index ratio like this since early 2000s when we had a takeoff in commodities. And of course the 70s when we had that massive move in commodities.
So how do you execute a strategy like that? You get short Dow and buy beans?
You could, if you wanted to set it up. I mean, I've identified a few different commodity charts we can look at. I think gold, we've corrected for over a year. Yeah. If you look at the correction, we're basically just checking this highs from 2011, 2012. Gold's going to be up and out. Own some gold. Silver is doing something similar, but in a different pattern. It's been more sideways, sort of a little triangle here. But again, it's sitting on top of all these highs that we saw back, 3, 4, 5, 6, 7, 8 years ago. Yeah. So silver's going to go. Copper's been the leader of the base metal type things. But again, look at this formation that's been happening here, sitting right on top of these old highs, right? Checking these old highs. Copper's going to go. The grains are going to go. Wheat's the strongest of the grains. As you can see, wheat, has been sideways
searching for a bottom here, Ben.
Yeah, the beans I want to show. Corn has pulled back, but I think corn may have found its bottom. I think beans may have found their bottom here. Okay. With this last flush. Both those I see higher prices on both those. Coffee looks really good. A couple softs that I like. Coffee. Yeah. And then sugar. Sugar, we were talking about at 16 the last time. We've been bouncing around 20 to 19. I mean, sugar could go, 25, 28, 30, 3 or different targets on that. So I think that, having exposure to commodities, however you do it, is a great way to protect yourself from the inflation that's coming. Yeah. I think there's potential for an energy crisis echo of the 70s. So having some exposure to oil and gas also will protect your portfolio and enjoy the ride. I said on the SPX chart, it's last call. Enjoy your ride, because it is. I think it feels like it's last call in the S&P, where we've got into Q1. Maybe it's January, maybe it's February, maybe it's March where we put that high in, but we got to really be wary once we get there. And between now and then, find a good spot to get in and enjoy the ride.
And be short dollars. So a lot of it's going to be, besides demand, a weak dollar is going to goose it because of nominal gains.
That's true. And I would think somewhere along the lines, maybe it's the bills the Democrats are wrangling over now, something gets passed, or the Fed does something that gooses the markets one more time and provides the match that really gets things into that speculative sort of last push higher. Lastly, I just wanted to plug this thing we're doing. We've been doing weekly videos for a while now where we just review the week, post them on the weekends, and identify markets that we think are going to go up versus stuff that may not move.
Who's
So
we, Ben? Have you become schizophrenic since our
No,
last
me
interview?
and Barry. Remember Barry, the guy I told
Okay,
you about? You talked to Barry,
I thought Barry was, just, kind of your
my alter ego. How I keep from being lonely when I'm trading.
You know what? Pardon me, Ben. It was a great presentation, man. And really, there he is. He puts a lot of thought and energy into it, and he's been right about so many things since. And one thing, count on Ben to retweet this interview. I don't know for how many times on for this one, Ben. It's a good one.
This is a good one. So let's say we'll do 28.
Months.
How about 28?
28 times. Follow my stream. And it's good. You should listen to this more than once. Okay. I really think you and write things down. And maybe, sometimes we watch things like this and, he's not pitching a trade or anything. There are things you could do.
Yeah.
With your cash and how to deploy them. And you think about it. It's not a trade. It's kind of a way to be hedged during these times, which is different. Not everyone remembers the 70s that's out there trading.
Mm-hmm.
I was alive then, but I really don't remember them. So anyway,
that means you had a good time.
Yeah. So I highly recommend following Ben and checking his stuff out and watching his videos. I'm glad our paths crossed, Ben.
Yeah, and I listen. I appreciate our relationship. I always enjoy spending time with you, and also I listen to your show every single day. There is no monopoly on good ideas in this business. You can always learn something, and you guys provide a lot of great information every single morning. So I do tune in every single day.
And so it's mutual respect, and thank you very much for that. And may this fall trading season be all green for you, my trading warrior brother. You
You
and
too, Dale.
all the people you work with, and you're like a messenger. So get the message out, and maybe you'll save some people some heartache.
I hope so.
Okay.
That's the goal, is to help people and see if it can keep you from stepping in a hole or hurting yourself.
I mean, maybe you go out and you stock up on items. Simple, so you become a little bit of a hoarder and things that may not be on the shelves.
That's right.
As we go through this, I'm too lazy to do that. I actually order my groceries online and have them delivered. So, Ben, we'll do this again soon, and thank you very much. And have a great weekend and great work.
Thanks, Dale. Appreciate time spent with you.
All right. So everyone, that's a wrap for the week. Hope we're adding value to what you're trying to accomplish by bringing guys like Ben in. I think give you a lot of food for thought. Besides what we do here before the interviews, with the whole team sharing what they're risking their money on and they believe in. If you want to say thank you, you subscribe. That's the best way to say thank you. And then, you know, you're doing something for both of us. So you could join the whole team in 6 minutes on the Morning Edge. Have a great weekend, everyone. And remember, most of all, whatever you're counting, whatever you're storing or hoarding, don't just count those items, count your blessings. And we'll see you on Monday. Adios.
Take care, Dale.
You too, Ben. Thank you.